Traders are monitoring the stock market for signs of a breakdown or a breakout. Joining us now is trader Tim Biggam of Buy Alerts. Good to have you with us right now, Tim. What can you tell us about this market? What is key?
Yeah, really looking at now the upside resistance on the S&P 500 at 5,500. We kind of saw perhaps that short-term low to start last week around the 5,000 level, but I think 5,500 may be severe overhead resistance for the short term, certainly. So I think stocks may stall out here and go back to that big range, no change sort of environment as earnings season also gets into full swing. And earnings, in my opinion, won't be as important as what the companies talk about, guide to going forward. So it's really, you're not going to really see the normal reaction to an earnings beat or miss that you would. It's more about what the company thinks about kind of the environment over the next several quarters and interest rates. The third big thing, not coming down really at all here. In fact, heading higher. So we're kind of maybe entering into a slight stagflation sort of period, which stocks don't like as well.
Do you see the possibility of another stock market drop? How vulnerable is this market?
I think as we kind of hinted at and talked about last week, that 5,000 level just kind of, in hindsight, looks like a support that might hold at least through earnings season. But, all bets are off if all of a sudden the tariff talk gets even more tumultuous, which I think that'll continue to soften as well. We're seeing the VIX back below kind of that high, certainly, that we saw. So normally that signals at least a short-term low. So I don't look for any fireworks unless something big happens on kind of the macro front.
What's your trade of the day?
Yeah, actually looking at some of these higher yielding stocks, along with selling a call against it, especially in the oil sector, which is one of the worst performing sectors recently. So a stock like Chevron trading at the lowest level in the past year, implied volatility also still near the highest level. So you're getting a yield over 5% and you're able to sell an expensive call, bringing even more premium further out of the money. So I kind of like that combination here. I think in a kind of sideways market, relying on that dividend yield and selling some option premium to hedge it makes a lot of sense here, at least for the next several months.
Lots to watch. Thank you, Tim.
You bet. Anytime, Ange. Take care.